I'm already seeing you guys enter into the live. We're going to kick this thing off here pretty soon. Don't forget to say hey in the chat. We're going to be watching the chat. Definitely get in the chat. I'll give it a couple more seconds. Yep. We're live. We're live on YouTube, X, and Instagram. And I see people trickling in. All right. I'm gonna just give it a couple more seconds. Let some more people enter into the room. All right, here we go. Oh, I see. Yep. Okay. All right, we got the link posted. People retweeting it. Here we go. So, yep, as the room's filling up, I would love to welcome you guys to the 4th edition of Lumia Live. I'm Mark Culture, and today we're talking about something that's, been a long time coming. DeFi and RWAs, a match made in heaven, working together like they're always supposed to be, right? I'm not here alone, actually. Today, I actually have the privilege of being joined by my beautiful co-host, Angelique, and I'm going to love to bring you on stage to say hey to the crowd.
Hey, Angelique. Oh, wait. I'm here to ask all the questions that you might be thinking, but you don't want to say out loud. If something sounds too technical, I'm going to call it out because I know I'm not the only person that needs things explained.
And shoot, you know what? Like that's perfect because I'm pretty sure we do have people in the crowd that are less technical and that may not understand like some of this top level stuff that we're talking about and may go over their heads. And so we do want to kind of bring it down. And Angel, we love that you are going to ask those questions for the crowd. You're basically our audience member on stage. Yeah. But we do have a crazy lineup today, a fire lineup for you guys. And I do believe they'll be able to help us explain some of this stuff and break it down into terms that you'll be able to understand it. And first off, I'm going to have to introduce our very own. We're going into this real quick. Our very own Diego. And then we'll bring up his cue card. Yep. 1 second. Yep. Our very own Diego, shaping Lumia's upcoming products to be among the most efficient and revenue driven in the market. So Diego, we're going to bring you on stage just to say hey to the crowd.
Oh. Hello, guys. Big pleasure to be here today. Big guests. Super exciting live. Can't wait for this to kick off.
Nah, awesome, Diego, man. Every time you get on and speak, I love your accent, man. I can't wait to visit you in Italy. All right. So next up, we have Alexandra. She's joining us from 1inch, and she is the head of BD and sales at 1inch, and she leads partnerships. She's actually the one that helped bring in the MasterCard powered 1inch card to market. Alexandra, we're going to bring you up on stage just for you to say a quick hello to the crowd.
GM, guys. Hope you're doing well. I won't be with the camera, but I just want to say hi with my face to the audience. Exciting to be here. Thanks a lot for having us.
Awesome. Nah, thank you, Alexandra. And just right now, currently she's at an event, and she was gracious enough to hop on and be a part of this awesome conversation. And next, we got our guy John. Co-founder of Hyperlane and CEO of Abacus Works. Before that, he was the managing director at Galaxy Digital, co-leading their investments. John, I'm going to bring you on stage just to give a quick shout to the crowd.
Hey, boy, great to be here. Thanks for having me. I think we're going to have some fun today.
Nah, we're going to have a lot of fun as soon as we get into it. I'm going to start off with some brain teasers, though, just to kind of get our minds warmed up and us thinking before we get into the actual hard questions. And then last but not least, me and Abu's had some private conversations, and this dude is awesome. So Abu's a core contributor at Morphex, lived in China where he worked at Way, and before getting into crypto full time. But Abu's been in crypto since 2017. So we actually got a real crypto OG on our hands here. So Abu, what's good, man?
Thanks for having me. Greetings to everyone here today. It's a pleasure to join you guys.
Nah, awesome. Awesome. Thank you. And that's the fire lineup we got for you guys today. Like just some brilliant minds across the board. And we're gonna really get into this. But before we even really get into things, one thing that we like to do on our Lumia Lives is a giveaway. And today we're doing a giveaway for 100 USDT in Lumia token. And I'm gonna kick it over to Angel so you know exactly what you have to do to win it.
Okay, thank you so much, Mark. So guys, how you could enter the giveaway, make sure that you're following the Lumia account on X, retweet the post on the live link, comment with a screenshot that you followed the Lumia account. But the most important thing is we want you to stay engaged, ask the right questions, be in the chat. We're going to be engaging with you throughout the entire show. And at the end of the show, we're going to take a couple questions also.
So if you missed it, I'm going to just reiterate. You got to be following the Lumia page on X. Make sure you screenshot and comment that photo on the tweet with the live link to this live. So you got to put that screenshot in there. So when I go and check the chat and I look at the comments and I see I'm looking in to see who I'm going to pick, I'm going to make sure you're following our X profile. Right. And then lastly, the best way to stay engaged, and I'm not seeing too many questions already, but we haven't really got into it. But the best way to stay engaged is to get in the chat and ask questions, guys. Like keep this thing going and stay live in the chat. If you just want to drop some fire emojis or whatever, like just stay engaged because that may win you this $100 USDT giveaway. But I'm gonna kind of get into this. I want to start with like a little brain teaser before we get into the thick of things. Something simple and just something that could relate to just us here on the stage and to those that are in the crowd watching, right? So I'm gonna start off. So this week we saw Bitcoin, the 100K support being tested, and then midweek I'm pretty sure it blasted right through it, right? So like, what's going on in crypto right now? Because we saw this with Bitcoin, but this happened across the board. So we saw Ethereum and others like hit some lows. So I would love to get you guys' take on the overall sentiment of the market, because I'm pretty sure I'm not the only one like wondering what's going on. Are we hitting a bear market? Like, what should I get my winter coat? It's gonna be a long winter. Like, y'all let me know what's good. I'm gonna kick this one off I'm gonna start with Diego first. Diego, would love for you to just give your take, and then we'll work our way around. Oh, I see some fire chats. I see some emojis. Thank you, Crypto Crazy. Go ahead, Diego.
Sure. Okay. Interesting question. So Bitcoin, obviously, king of crypto. So we are seeing it going a little lower, but we know that there is value now behind Bitcoin. So it's not anymore like this magic internet money. It's something that financial institutions are buying. Clearly, it makes sense as this medium of exchange and store of value for the markets, the worldwide markets. Everyone now knows that this is really trustless. So it's a technology that will stay there. It's approved by everyone. Obviously, speculation will still be there forever. There will be less speculation going on, obviously, as the market cap of Bitcoin grows. But we will still see this. Probably the big guys are just scaring us a bit in order to buy more. Who knows? Mm-hmm.
Oh no, yeah, that's awesome. And you actually said something pretty interesting, because I think we're going to get into like that we're going to get into like answering about speculative trading and why RWAs definitely defeats that, or is a solution to speculative trading and what people are mainly doing in crypto. So I love that you brought that up, but I'm getting ahead of myself. I would love to toss this over to Alexandra. I would love for you to kind of get on this question. And if you don't remember, I'm just kind of asking like what's going on with crypto, because we're seeing, support levels being tested and blasted through like with Ethereum or Bitcoin. I would love to get your take on just like the overall sentiment of the market right now.
Yeah, first of all, just secure everyone. It's not financial advice, and please always do your own research.
Gotta throw that out there.
I know my legal team is sitting just in front of me. I have to say that. So, anyways, honestly, we yesterday discussed with the team that it's maybe probably the last chance to buy. So we are really like long-term believers, and all the team, being the DeFi dreamers, are just can't wait to see when the mass adoption happens, and this is what all our team is working on. And this is just shows that. I mean, we see the trends with S&P, that the market is going up and down, and according to this trend is, yes, that's what our team said yesterday, our financial team. We had this discussion that it might be the last chance to buy. And then we just go to the less volatile market, where we will have just the very plain rates, and like nothing happened for us, to be honest. It's just another good opportunity for those who really truly believe. That's maybe some, without diving deeper into details, sharing my sharing my thoughts.
No, that was awesome. And it seems like both you and Diego talked about volatility, right? And that kind of like brings me around today's centers around today's topic of RWAs and DeFi, right? Because like people are looking for stability in crypto and trading. Like it's a little volatile, so it's hard to find that. And people are tired of speculative trading. And this is kind of what led me into wanting to do this topic, because there were some stats that kind of caught my attention, especially in DeFi. Right. So DeFi is growing faster than overall crypto adoption. And what we're seeing is, I saw that the addresses that were active grew from, in between 43 to 46%. And overall crypto was around like 24 to 31%, which is telling me that DeFi or people that are already in crypto are moving over into DeFi. So I would love to kind of just throw this question around to the audience. The audience, like, why is DeFi pulling people in faster than crypto? And Sasha, I'm gonna kick this one to you.
Happy to. Being one of the, like, not still being the biggest aggregator in EVM space, happy to comment on that. And we see the trend. It's not about just DeFi in general. We see the biggest centralized exchanges is moving into self-custody approach, where you can control your money. It's all about the financial freedom, and the situation that happening with the custodial solutions. Sometimes putting the customers, our basically users, into the situation where they strict. So the DeFi opened the market to first own your crypto assets, second without very like additional restrictions, compliance. I mean, still compliance, but maybe legal restrictions. Get into the whole market and start generating revenue for themselves, or even like doing the daily operations instantly. Like, for example, I'm Ukrainian, and there is once this situation, like any situations that happen where there is limitations on the banking, crypto always help. And the DeFi specifically is the way how you can sometimes support the families and without any kind of third party verification, kind of. This is maybe general, like to start the discussion. Maybe some guys you have maybe more insights. And
okay, so before we go further, can someone explain DeFi in like super simple terms? Because I know it's decentralized finance, but what does that actually mean?
And,
I was like,
take it, bro.
Well, so been involved with DeFi for, I guess, like 8-something years now. Really, what it is to think like, you today can have lots of access to what we call financial services, right? So like banking, if you need to borrow some money, you can have access to financial trading in the form of like in making investments, whether it's buying stocks, buying bonds, whatever it is. And so all those things fall under the umbrella of financial services. This has generally been provided off-chain by banks, investment advisors, brokers, etc. And all of those services like happen in a way where you have an account with some big firm. That big firm then extends those services to you. They charge fees for those services, and you are dependent on them to both hold your assets and like you're kind of like I have an account with Wells Fargo. Wells Fargo also 10 years ago, or I guess 15 years ago now, had a scandal in the Los Angeles area where they were stealing money from people's accounts. They were opening up fake accounts for us and then charging us money for those fake accounts. And we really couldn't do anything about it, like they're your bank. So like
Kind of crazy.
they hold the money, and then like when you come and get it and you say, hey, I want to get my money out, like they need to give it to you, and like they can totally say no. Like anyone in the audience who's ever tried to withdraw their whole bank account from their bank, their whole balance, knows they usually don't. If you have more than a few $100s in there, they're not going to let you do that in the same day. They'll say that it's a reason is because it's for like security measures or whatever. So anyways, those are financial services, and that's how this has been provided before we had something like DeFi. And the entire concept of DeFi is using these smart contracts, these like apps that exist on blockchains, to be able to provide the same or similar types of financial services without the need for an intermediary party, someone like Wells Fargo, to be able to do it in a way that feels, or that more often than not is a lot more non-custodial, meaning that the thing that gives you the financial services does not have the ultimate control over you or your assets. And that's really what DeFi is. And so today we have trading through these systems, we have lending through these systems, and a whole other types of financial services.
Okay, got it. So no banks, no middleman, just you and the protocol. All right, thank you
Exactly
for
right.
the explanation. That was
No,
good.
that was actually really dope, because I'm pretty sure Angelique is not the only person that's sitting here or just in the audience that is really trying to get an understanding of DeFi. So I really appreciate your explanation, John. And then Abu, we're over. You're over at Morphex. You're in the trenches. Like, I would love to get your take on just like why do we think people are pulling over into DeFi faster than the rest of crypto? Why is it DeFi the most exciting thing? And why are we seeing it, grow 43 to 46%?
Well, we are seeing like real sustained demand for DeFi and DEXs across the board. DEX has especially been a very hot topic and been exploding the last year. What changed is that these platforms finally crossed the threshold from like interesting alternative to serious market infrastructure. And the perpetual markets just started. I think we could expand it more into other directions, especially RWAs. And apart from that, the custody is the main aspect to it. As explained, DeFi is all about like basically cutting the middleman, right? And it's an issue, especially on centralized exchanges. A clear example is last week we had this incident on one of the centralized exchanges. It claimed to be a non-KSI one, but apparently lots of users couldn't withdraw their money because the exchange blocked them and demanded KIC, this kind of thing, and basically motivates everyone to switch to the DeFi, to DEXs, instead of relying on these centralized entities, because they can basically block you or take your money at any given point. And that's what makes DeFi and DEXs very interesting, and people switching to them at this point.
Oh, no, awesome. That definitely would explain why a lot of people are getting more interested in it. And then Diego, you're here with me at Lumia, the Chief Product Officer, right? I would love to get your take on this question and just like your perspective on like RWAs, because I think that'll lead us into this next segment.
Okay, yeah. So DeFi is new financial system. So as John was saying, we see that the old financial system is not optimal, is not the best that we can get. So we started to build this new financial system, and it works better, obviously, with all the problems, initial problems, that to bootstrap it. But the primitives here are really strong. So lending protocols, swap protocols, permissionless swap protocols with AMM pools. All of this technology is amazing. It's clearly the future of finance, and is getting more and more adopted. So how DeFi is getting the first people in is by via speculation. So people come, see big returns. We already saw that. We saw that first with the DeFi summer. Then we saw all this sort of speculations that you can imagine, meme coins, etc. But now we are seeing that the attention is shifting to something more sustainable, both from the retail perspective. So retails start to see that they have been rug pulled left and right, everywhere, rug pulls everywhere else. So they start to look into something more solid that still can pay good yields, because you can easily find RWA yields, for example, for 10, 11, 12% on private credit, etc. So I was saying that we built these decentralized financial primitives. Now they need to be used for something real. So that's where RWAs come in.
Okay.
Yeah.
Oh no, you're good. No, my bad. I cut you off, but I was just like, no, I was just kind of, getting at that is like, we're looking for something that a little bit less speculative, that maybe has more stability, and I do believe RWAs definitely brings that. And this kind of leads into the next section because we hit on DeFi and we kind of now have an understanding of DeFi. So now we're gonna kind of get into RWAs and why RWAs and DeFi are a natural fit, right? And so before we really get into the thick of things, like Diego, I'm gonna kick this one to you just because you're with us, and so you probably have the best understanding of this. And I might kick it around the room and see if anybody else has an understanding of RWAs and what it is, but in layman's terms, right? Because we may have some people in the crowd that may not understand what an RWA is, but I would love for you just to give a quick explainer of like what an RWA is and/or just like an example.
Okay, yeah. So to put it really simple, real world assets are physical assets that can be real estate, commodities, company shares that are represented on the blockchain as digital tokens. So this, the use case of this is that it makes these assets way more liquid and accessible, since literally anyone can buy and own even a small fraction of something really valuable, which could be, for example, a fraction of real estate, which in the previous finance, the old finance, we couldn't do this. So this is what real world assets are introducing now to DeFi. So we open door literally to new investment opportunities, making finance more inclusive and also transparent for everyone.
Nah, awesome. And it sounds like RWA solve a lot of, or could solve a lot of problems for DeFi. And John and Alexandra, you guys are kind of working, alongside us. I would love to get you guys' takes on this, how you see RWAs like solving some problems for DeFi.
I think in terms of solving problems for DeFi, one of the things that has been an issue in the system is that there are some like nothing. There's no free lunch, right? Like there's nothing that is just like universally always really good and has no faults. And so we just talked earlier about what is DeFi, how does it different from like just financial services off chain. And so part of what the middleman does is it organizes who can get these services and who can't, and when can they get them and when can they not get them. And when you have a protocol, like either you have a systematic way that's defined in code of who gets to do what when, or you leave it totally permissionless. And when you leave it totally permissionless, now that's a constraint on the system. And so because of that, like think of it, if the bank didn't know who it was lending to, they would probably end up losing a bunch of money on its loans. Because like it'd be like, hey, wait, hey bank, you're gonna let me borrow some money. I'm like, hey, let me get some 10 grand. And then like you have no idea who I am. So I'm just gonna run off with the money.
Yeah,
And so very hard to do that. And like, you probably not gonna have a decentralized permissionless bank that doesn't know who the borrower is. And so lending on chain, lending on DeFi so far has been done. It's collateral backed lending. Like when you go out, you buy a house, you get a mortgage. A mortgage is basically a loan against the house.
Yep.
So most lending in DeFi is kind of like you put down collateral and then you get to borrow. And outside of stable coins, we don't have a lot of like forms of collateral that are not super volatile. Now, the bringing on many new types of off-chain assets on-chain through like what we call RWAs now, like Apple is not the most volatile stock in the world. If you happen to work at Apple, like unless you own a lot of Apple, like the banks are not going to be like, hey, I'm going to give you a loan against your Apple shares, so that like
Mhm.
instead of selling them to buy that car that you want, or pay for your kids' tuition, like you can have this loan. You really need good size for banks to start offering you securities-based lending. Well, once it's on chain, once Apple's on chain, like what's stopping a protocol for like Aave or like Morpho from putting up a vault that says, hey, you know what? We're willing to lend you USD, we're willing to lend you cash, basically, against your Apple stock. We're willing to lend you cash against, your US treasuries and things of that sort. And so what it does is introduces lots of new forms of stable collateral, because again, the only forms of collateral we have before RWAs were all crypto based. And so once you take out stable coins, they're all really volatile. Like love Bitcoin, own a decent amount of Bitcoin, love ETH. Those are volatile assets, right? Like
Mhm.
both of those have lost more than 20% just in like the last 2 weeks. So if you were borrowing against them, you're in a tough spot now.
Down,
Uh,
down, down.
and so yeah, that's like the
Yeah,
most obvious intersection
yeah.
of like what is unlocked for DeFi once RWAs come on, is like now you're getting way more forms of collateral.
Mhm.
Um, and that just opens up a whole boatload of lending that people were not doing on chain before.
No, awesome. And it sounds like, I don't know, just from your explanation and answering that question, it sounds like you're excited about this, or just as excited about this as
Oh, for
we are.
sure. For sure.
But real quick, so whenever you're borrowing this money, it's going against the crypto that you already have in your account, so you don't have to get a loan from the bank.
Yeah. So
Am
think
I
about it
understanding
like this, like,
correctly?
today, if you have a portfolio of assets, whether those are like, off-chain assets or like crypto assets, you can get a loan against them. Now, if it's stocks that you have in a portfolio, if you're dealing with like less than $1 million, it's going to be pretty difficult to find a private bank to even want you as a customer, for them to give you the option to
Yeah.
get a loan against those assets. On chain, Maker basically, like, it doesn't care, or sorry, not Maker, like Aave doesn't care how much ETH you put into
Mhm.
it. Like it'll let you put in like, $500 of ETH, and then you could borrow like $250 of cash against your ETH. And
So
so
is it
now, go
so
ahead.
sorry, is it so it's smart to get a loan out that way, just so you're not taking the crypto back into your own account, so you don't get taxed on it, basically?
If smart depends on everyone's own situation, but a lot of times, like, there are things that, for whatever reason, you do not want to sell them at this point. And if you
Mhm.
don't want to sell them, not to face the taxes, not to reduce your position, everyone has their own reasons. If you've decided that you don't want to sell it, having the flexibility of getting a loan is very, very nice. And the like traditional world of financial services is just really not built to extend these like small and bespoke sized loans, right? Like,
Yeah.
you know, you and I are like beneath a certain account size. Like the Wall Street banks are just not going to care to service us. But like the protocol, it
Yeah.
serves everybody. And so
Yeah.
whether you're like at $10 or $10 million, it acts all the same.
Yeah. So it's an opportunity for everybody to leverage that and get
Totally.
financial independence. So that's really cool.
No, awesome.
Yeah,
And you
I
guys,
can.
oh, go ahead. No, yeah. If you want to chime in.
Yeah, I mean, I can. I want to also add that, like, basically, for me, RWA is not just a narrative anymore, and this is basically the bridge where DeFi finally meets the real economy in a scalable institutional way. And we already touched a bit about the tokenized, basically, basic treasuries, real the yield on chain. But a part of that, we see also the tokenization of real estate, which is also kind of solve another liquidity issue for the developers, not developers that we all know, blockchain developers, but the construction developers. And
Mhm.
I've just moved to UAE, and I see this big trend of tokenized the real world, I don't know, apartments, lands,
Mhm.
and they're bringing the way how this is the way how they fund their developments, and this is super cool. So basically, like, I don't know, Damak, other developers that are here exist now can just offer, put the the tokenized apartments on the market, and everyone all over the globe can just contribute or with either a piece of this apartment or buy the whole and still get the yield, the portion of the renting of this apartment. And this is a real world economy example. It truly excites me. And another thing is about the institutional onboarding. Whereas their RWA is a kind of an entry point. We see the BlackRock build, we see the JP Morgan Onyx, we see the Franklin Templeton that entering into that thing. Is big institutions right now are not basically experimenting with crypto; they are experimenting with on-chain settlement and tokenized cash flow. And what we see, like in BD, is that every week we get inbound requests from banks, asset managers, and fintechs exploring DeFi for settlements, FX routing, liquidity aggregation, automatic yield, kind of corporate treasury operations. And this is super cool. And this is where we see like finally potentially mass adoption happen. And those like we already touched a bit RWAs and DeFi derivatives. This is a kind of new hedging tools actually, and we already discussed it. So, and I would see like if you ask me what basically next is maybe where the RWAs will become a default liquidity layer for wallets, aggregators, yield products, real estate capital markets, corporate treasury flows, like on-chain derivatives, stable institutional liquidity. And this is basically where DeFi stops being the playground and it becomes infrastructure for the global economy. And this is could be even more exciting. And hopefully, like sooner, the question from the institutions will be not why DeFi, but how to get to how do we plug into it. And this is where like Lumia, us, Hyperline, maybe everyone will say, we know what to do, guys. come and we show you how to DeFi. So that's maybe kind of my comments here.
I could hear, I could literally feel and hear the passion in just that, what you just said. And so, you know, Lumia on 1 inch, nudge. But so like what I'm hearing though, like just as we went around the room is like stability is one, liquidity, automation, access. But Abu, it sounds like you want to say something. I just wanted to make sure, like,
also liquidity
I'm
is
like reiterating those.
Yeah.
Liquidity is a big part of, so say, liquidity in current DeFi, like in the past, it behaved like a migrating bird. It was flocking from one place to another. It appears when incentives peak and vanishes when they fade. Basically, it was not sustainable. And RWAs, they ensure that liquidity because they generate real steady yield, giving a capital reason to remain in DeFi space. RWAs open access to the far larger ocean of bonds, credit, real estate, and basically expanding DeFi into this. So one of the key issues that RWA solving for DeFi is that liquidity, I would say.
No, awesome.
Okay, so you could turn a property into like 1,000 tokens and anyone can buy and sell at any time. That's so crazy because normally whenever you sell a house, it takes forever, but you could literally have the liquidity and like trade it just like crypto. So it could potentially be like a short-term investment.
I'm sorry, Abu.
Yeah. It is, and it's already kind of some platforms which is tokenizing real world assets like Binaryx, for example. They're putting first the market where you can buy basically on the sale, and then they're already developing the secondary market where you can basically trade your real world apartments, and this is like super cool.
That is so
Diego,
cool.
I think this might be a good segue, like where we could mention the Lumia Towers.
Yeah, definitely. I was thinking about this because like Lumia Towers, our first big project regarding tokenization of real estate, pretty huge, 200 million worth of apartments in Istanbul are being built in these super luxury buildings. So this is our first way to approach this market, but we are seeing, and it was really interesting what Alexandra was saying, because regarding tokenization of lands, we are definitely doing something regarding this. I can't say too much about that, but it's an angle that it's really interesting for real estate developers because it unlocks for them a new to source new type of investments instead of going through their usual channels. They will be able to access the whole liquidity of Web3 and everyone that will be onboarded to Web3 to build something new and grow cities for real. Like, so it's, as we were saying earlier, it's not simple DeFi anymore. So money Legos within digital tokens, but in that case, it's actually building stuff. And this is good for all the parties involved in this, for the real estate developers that can source funds from all over the world, and from the liquidity providers that will get real yields and safe yields. So it's not speculative yields anymore. It's not inflationary rewards anymore, but it's a real yield coming from people building. So this is the Lumia Towers are the very start for this. As I was saying, we are having this project about land developments. So this is coming. It will come in different shapes. So for private credit, credit, the land side, we can say it's private credit because we are helping companies to raise funds to build. So this can be applied to literally all the real world assets, all the real companies. We are getting a lot of requests for this, and we are going to show a lot regarding this.
Awesome. Just like real quick before we move on to this next segment, John, I wanted to toss this to you. It kind of seemed like everybody was hitting on it. So Alexandra and Diego hit on it, but like actual real use cases for RWAs, right? So it's like, there might be people in the crowd wondering like, how does this like actually look like in my life, in my everyday life? What could RWAs look like? An example. And I mean, Diego and Alexandra hit on some, but are there any other ways that RWAs could affect the everyday person? So, I mean, we know us, we're in the weeds, we're in the trenches of crypto, right? Like, so we understand it and we know how this is playing out. But like, let's say somebody like, I don't know, your aunt or your uncle or, dad, mom, people that aren't necessarily in, I don't know, maybe your dad or mom are in crypto, I'm just assuming, but like people that aren't necessarily in crypto, what could RWAs look like in their everyday lives?
I think the two most obvious ways are that so it's much easier to trade fractional pieces of a crypto asset than it is of an off-chain asset. So even for the same one, so like a lot of people know who Warren Buffett is, and they by extension know Berkshire Hathaway. Berkshire Hathaway is a very, very mighty stock price, just how they like to structure their company. It's well over, or at least last time I looked, well over $1,000. And so you and I, it would be very difficult to say like, well, I want a piece of what Warren's doing. I think Warren's amazing. Buying, $10 worth of, Berkshire Hathaway stock is much more manageable to do once it's tokenized and put on chain than it is, like I forget the name of the company, but there was a company for the last like 6-7 years that was doing a ton of businesses. Like their entire innovation was they take on the administrative burden of fractionalizing off-chain assets. And it's like, oh, you have to do all this stuff where it's like, if this was a smart contract, you don't have to do anything. It just works. So more accessibility to these assets, because they can run on crypto rails, and they'll be extended to you, I think, through non-crypto specific ways, right? So like Robinhood will be able to use this as a backend that then lets you say, oh yeah, I want to buy $2 of Berkshire because I love Warren. I think he's awesome. The other is once you have access to those assets and or like some of the assets that you already have exposure to are put on chain. Someone like Robinhood, today Robinhood doesn't let you borrow against your portfolio. So that accessibility of securities-based lending, which really was, and I guess right at this moment in time, November of 2025, still mostly is the purview of like the very wealthy, right? Because it is lending against securities is something that private banks do for the most part. So accessibility to both of these things, more to more assets in like fractionalized form, and then to financial services like lending. Those are the two ways I think that it might like interact with a regular person. But beyond that, and not to like, sound like I'm bearish on this because I'm extremely bullish on it. There's not going to be that many other ways, because the nice thing about, like, this is something that lives in the background, like when think of the last time that like you ordered something from like an app on your phone. You don't
Mhm.
investigate how it works, it just did. And
Uber
so in
Eats
the same
yesterday.
way, exactly right, like,
I'm not thinking about how the freaking app works and the
yeah,
wires and all the,
yeah,
why?
I don't
I
know,
just
like,
want my
do
food to
they
show up
run on
on
like
my doorstep.
Amazon's cloud, or are they on
Yeah,
Google's? I
yeah,
don't know if they have their own. I don't know, it just worked. I just did the thing, and like the guy just showed up. And in the same way, like, the impact of RWOs will not, the revolution will not be televised, like in that sense. It's not going to be like this
gotta
big
different
thing
thing.
that you as the guy at home are going to know about. It's just suddenly, like, when you go on Robinhood, they're going to be like, hey, you're sitting on like $15,000 in your thing. If you'd like, you can get a loan at 7% against your stock holdings. And you'll be like, oh shit, they've never asked me this before. Why are they asking me this now? This is really cool. I
Yeah.
never thought I could do that. And you're not going to make the connection. It's like, oh, wait, this runs on crypto rails. Like, no, it's just going to be there.
Yeah, they
No,
just want the solution.
Exactly.
no,
Mhm.
awesome. And thank you for that, because now that we've talked about DeFi, we talked about RWAs and how it can help DeFi. Like now we're gonna kind of get into some of the barriers to RWA adoption and why it's not mainstream yet, right? And so just for the audience out there, we actually have a special guest coming in, probably one of my favorite people to listen to and listen to talk. I actually had the pleasure of being with him when we were in Washington D.C. meeting with regulators. But I'm excited to bring him in on this next segment. But yeah, now there's something that I just been thinking about. Oh, there he is, Dennis. You're on stage, my boy.
Sorry, I
You're
was so
good.
zoned out.
Good.
Hey, how you guys doing?
No, we're good. We're good, bro. But
Good to
no, yeah,
see.
I
It's a
want to.
big lineup.
Oh, huge lineup. We're happy to have you. Yeah, I'm gonna throw something here. It's just like something that's been on my mind is like, just kind of getting on the topic of RWA adoption and like barriers to it, right? So like something that's been on my mind is like it's been harder to invest, right? Millennials can't afford to invest in like real estate. Bonds are kind of boring and they're not as liquid, right? And then one of the last things is I think people are starting to just kind of be uncomfortable with the financial systems we currently have set up. And
Yep.
like, oh, wait,
Yeah, I
somebody.
just want to say, like, it's general in general. It's the user experience of onboarding in DeFi. It's not just about the RWA. It's just hard to onboard into into DeFi. It's still like you cannot say to your mom, go and create this wallet, self custody, keep the words in somewhere safe place. It's hard to just not just for RWAs, and it's really hard in general. We still need to improve the user experience in terms of the onboarding thing. That's I would say it's connected to the whole industry still.
Mhm. No, yeah, most definitely. But I mean, I do think like one of these things is like if people knew more about it, right? Knew more about crypto, knew more about RWAs, it would be a bit more attractive for them to want to get in on. But I'm going to toss a question, to the panel, and Dennis, like, now that you're here, feel free to hop in on this one. So, um, basically, like, how do we get RWAs to increase investment across the board? So generally, basically what I'm asking is how do we get more people building wealth, instead of just kind of sitting on the sidelines and seeing other people build wealth, right? Like a lot of people are sitting on the sidelines. A lot of millennials, as I said, like can invest, but how can they start getting in, or how can we increase like RWA investment across the board? Diego, I'll toss this one to you first, and then we'll kind of just go around the room.
Yeah, so we definitely want to attract the next billion users, let's say. to this world. So incentives, for example, is something that often move capital within DeFi, but also within traditional finance. So, for example, we have been thinking about incentives a lot, seeing the power of incentives. And we figured out that for incentives, it's for RWAs, for incentivization of RWAs, it's possible to keep the numbers more realistic, because we have been seeing like 1,000 APYs in DeFi. So people get rewarded with crazy amount of tokens that end up being basically worthless after a while. So for RWAs, we can keep the numbers more realistic, attract real capital that is productive capital. So this will create a loop for us, for the user, for everyone, that is a sustainable loop compared to what we are seeing now. So this is definitely a good point for growing user base of RWAs in DeFi. Also, I would say that fragmentation of the assets now is a problem as well, in the sense that we are seeing RWAs, a bit of RWAs on this chain, a bit on this protocol, a bit here and a bit there. That's why we partnered literally with Hyperlane, one of the best cross-chain messaging protocols providers that we know, with their interchain security module. This allows to have really trustless and tailored cross-chain message passing, so that we can, thanks to this tool, we will be able to let people interact with our RWAs from any chain, or with RWAs from other chains, from our chain, from our wallets, from our user base. So these two have a unified ecosystem of real-world assets. This is really important, because we can't expect users to go and shop from one chain to another. So to unify this is really important, for sure.
No, awesome. And if anybody else, like Dennis, I would love for you to kind of get in on this too, since we have you here. Is just basically, how do we increase RWA investing across the board, or just like get people off the sidelines into investing in general?
Yeah, I think it comes down to a few things. What Sasha was saying earlier as well about the complexities of onboarding people onto DeFi and in general crypto. I think we first need to come out of this echo chamber that we've built.
Wait,
you know,
1 second. You know what? I messed up, because some people on the show may not even know who you are. But first and foremost, this is Dennis, the CTO of Lumia. I'll let him, like just a quick two things about yourself, and then get into it. Sorry, that's my bad.
Yeah. So Dennis, CTO, blockchain architect at Lumia. I'm a software engineer by trade. I've been a software engineer for 15 years. Last 7-8 years has been in the Web3 space, building multiple products. And now I think we've got the next new big thing that's going to be sustainable, not just hype run, RWAs. And that's what my focus is on right now.
No, nice.
So yeah, going back to how do we get people more interested? I think the first thing is what Sasha was saying, the onboarding experience. It has to be way more seamless than what it is today. Even with account abstraction, that doesn't really solve the issues that typical users have. If you come out of the age group that we have in the crypto space right now, which is about 13 to 36, I think it's roughly the majority age group. And you try to go sort of 45 plus or 50 plus, they get confused, even with account abstraction, with signups, wallet. The whole concept of wallets is just foreign to them. So I think we need to find ways to allow people to sign up way more quicker, a lot more streamlined, a lot more integrated with fiat rails, so that people can use their credit cards, people can use the IBANs, the virtual IBANs to transfer currencies, etc. And then the second thing is, once you onboard them, how do you present the opportunity so it looks genuine and it looks sustainable? Because I think it was a couple of days ago where I forgot the protocol's name now, but one of the protocols lost 94 million. I think it was Stream Finance. Stream Finance lost 94 million in an exploit. And that affected Morpho. And then they affected a bunch of DeFi protocols that was relaying on top of that. Now, this kind of inherent risk and sort of this continuous exploitation of DeFi is not going to help us to onboard the RWA and the next generation of users and come out of this echo chamber. So we need much more smarter systems, much more audited systems. We actually need to play on AI and AI agents a lot more and rely on them a lot more. When you want to interact with DeFi or when you want to find sustainable yields, the easiest way would be to speak to your device, or would be to just type to your device to say, find me yield opportunity that's, let's say, regulated by VARA, that's sustainable, and it should be able to do that for you. That's the main thing, I think. And as Diego was saying, we need to stay away from these hyperinflation, insane yield percentages. There is a saying in DeFi where if the yield is too good to be true, you are probably the yield. So you don't want to become the yield in this space and become the exit liquidity for the people that have entered first. So that kind of gambling aspect has to disappear. And when I say we, I mean, I'm talking about in general Web3 community, but we basically turned Web3 into a massive casino right now. It's just, and it's got worse odds than Las Vegas, probably. So we need to change that, and we need to build actual products that matters and tries to solve problems people are facing. Otherwise, what are we doing? Like, we're just basically building Wall Street on steroids, right? It's just a bunch of gamblers, a lot of leverage, black boxes. So we need to really think about different types of opportunities and different types of applications, which is where things like Morphex comes in. 1inch becomes a gateway to serve liquidity to multiple avenues. Lumia's ventures with the whole Lumia Towers. If it wasn't for example, Lumia Towers is built in Istanbul, but you could invest from it anywhere globally. If you were to try to do that today and you live in the US, it's virtually impossible. There's so many things that you have to do. There's so many fees. And if we keep building these kind of opportunities and people realize that, these are not just narratives or hypes that people are running, and there is genuine yield that's sustainable, even in the deepest bear market, then we're going to get the traction we need and the traction we want. Because especially in the deepest bear market, everything collapses. But if I could preserve my net worth by investing into these real assets, then it's a no-brainer for me to kind of diversify and put some of my net worth into RWAs while keeping some of them in a more risky asset class, whether that's meme coins, etc. And when you look at what's probably going to happen in the next 5-10 years, everything's going to sort of converge, and this 24/7 trading mechanism is going to come in with AI agents managing your wealth. It all kind of comes together, and it will just just gain traction. That's kind of what I think we should be heading towards, or we should be heading towards.
No, awesome. No, thank you for that.
This might be a dumb question, but where would you normally buy RWA? Can you buy it on like Coinbase or Phantom or anything? Or...
Well, yeah, right now, I mean, the only RWAs you could technically buy right now is US Treasury T-bills. I mean, they are the most traction gained RWAs. But if you wanted to buy, for example, a tokenized commodity or tokenized property, I don't think many options exist there. I mean, there was something called Prepco, so advertisements where you could buy property on there, but it wasn't really tokenized assets, and you can't really sell it, you can't trade it. There is no secondary market, you can't use it as collateral. So it's kind of like this dummy asset. I don't think anyone has won the race where you could buy and sell RWA assets yet, which is why we're quite bullish on Lumia in general, and we think we're going to capture that market.
Nice.
Yeah, if I can chime in here, we can see a distinction between RWAs that are accessible in a permissionless way and RWAs that are accessible in a permissioned way, and are basically not tokens, not digitalized tokens. So, for example, on 1inch, I think that you can already access some RWAs, some stocks, etc., in a permissionless way. I would love to talk maybe later about our approach to tokenized stocks and traditional financial instruments. So yeah, more or less, mostly the way for people to access RWAs now is more for institutions, more permissioned. So our big focus also here is to bring this to everyone, so to make it accessible permissionless way. This is really a key point for us.
No, nice. And I just kind of like want to thank you, Dennis, like show you some love, because you just kind of casually dropped in on us, and I saw you at the bottom of the chat, and then dropped all these bombs and just knowledge on us just now. And I really appreciate you coming on, and I'm pretty sure the audience got a lot from what you said. And thank you as well, Diego. Go ahead.
And then to the audience, if you guys have any questions, you have all these people here that could answer. They're very high value information, so don't be afraid. Those who ask a question is a fool for a minute, but the man who does not ask a question is a fool for life. So go ahead and keep commenting, keep engaging with the chat, because remember, we're still doing the giveaway, okay?
I've been watching this entire time.
Mm-hmm.
So just real quick, just to pose like some of the barriers, because I mean, Dennis, I think you were kind of touching on these, but like obviously, like, you know, we're here and RWAs are on the scene and it's a hot topic, but it's not super mainstream yet. So what are the actual problems that like are stalling or just slowing it down? What do you guys think some of the problems are? And then I'm gonna toss this one. I mean, I don't know, Alexandra, if you're still here around with us, but I'm gonna go around the room. I would love for you to chime in on this as well. But we'll start with, you know, since Dennis, you're here, we'll start with you, and then we'll bump it over to Alexandra.
Mark, I already forgot the question. Can you repeat the question?
Yeah, no, I got you. It's just basically like, what are the things, you know, with RWAs being so great and helping out DeFi, right? There are, you know, some barriers and things that we have to work through. And it's not just RWAs, I think it's crypto in general. But what are some actual problems that RWAs, and maybe you can hit on something more specific, since we are in the weeds, in the trenches of RWAs, but what's actually slowing us down from getting this mainstream? Because I feel like RWAs are one of the hot topics in crypto right now, but it's, you know, obviously it's still not mainstream. So what would it take, or what are the things that's slowing us down to you know, make it more mainstream, to make it more just more adoptable?
Yeah. So I'll keep it short as I can. I think one of the main blockers is actually legals and the time it takes for current traditional systems to adjust and adapt to 24/7 trading with blockchain rails integrated, and vice versa for blockchain systems to be integrated with TradFi systems and accept stablecoin rails. I think that's sort of the key area, and that's why it's taken so long for this traction to come along. But the reason why you keep RWAs over and over again is because it's happening. It's happening in real time, but it's going to take time. It's not going to be something that is like a narrative where, you know, you could push out a bunch of tweets through influencers and it's going to become this big next thing. It needs law changes. It needs changes to how, you know, disputes will be handled. So, for example, if I'm buying a property with 1,000 people and I have a dispute, how do I handle that in court? That kind of mechanism is still sort of in a gray area. And that is the key to full-on traction and getting more people on board. I think that is actually, because from a tech perspective, from an engineering perspective, I think we already have all the tools and mechanisms that we need and we want. But now how do we sort of make it align with the legal jurisdictions and the sort of judiciary systems that we already have in place? And then how do we get more institutional products on chain while, you know, maintaining the legality of things off chain?
No, awesome. And then Abu, kind of been sitting on the sidelines. We'd love to get you involved on this one as well. If you need me to repeat the question.
I remember it.
Okay.
So basically, I think that RWAs haven't broken into the mainstream because the system around them is still like stitched together with very loose threads. It's not like unified or anything. It's just a bunch of things in a very like chaotic system. Also, legal part is also a big thing. Ownership is mostly trapped in legal documents instead of living directly on chain. And regulators are cautious right now, and the rules we have today are not really suited for the things that move at blockchain speed. instant, basically. And liquidity is spread thin across dozens of small venues. One of the examples I would say, there is a RWA company in Switzerland. They basically tokenize gemerald jewelries. And in order to access them, you have to do KYC. And apart from that, if you want to get the access to the token, the RW token of this basically jewelry, you have to go to them, ask them to send you this token, and when you basically done with, you want to sell it, you have to redeem it through this platform again. So it's not permissionless, and permissionless is basically what I think stopping people from using it. This kind of barriers needs to be fixed, in my opinion. This is a current state. Right now, we see that many RWA companies are limited to institutional clients, not really retail folks.
Awesome. And that kind of we can kind of segue into, Abu, we have you over at Morphex. And Diego, I know, as the CPO of the company of Lumia, you're working very closely with some of our ecosystem partners, especially with Morphex. So we'd love for you to kind of start to get into, or just kind of go over, your basic understanding of Morphex and what we're doing with them, and then maybe get some insight from Abu as well.
Mm-hmm. Yeah, sure. So Morphex, we love Morphex. We love Morphex team as well. They are passionate about building in the RWAs field and on Lumia. They can really see our vision. So I've been studying Morphex quite a bit, also supporting the team with research and product design. So Abu, correct me if I'm saying something wrong regarding Morphex. But so Morphex is the universal market. Universal market in the sense that you can trade literally everything on Morphex. Everything, every type of real world asset, every type of crypto asset, you can have it on Morphex. People might wonder how can this happen? How can you have all the assets, all the existing assets in one single platform? So we as Lumia have been building this technology called RWA tokens for some time now. So RWA tokens is a way for us to bring all the assets that are offered on a centralized venue of trading to the blockchain, to Lumia chain. So to explain a little what RWA tokens are, synthetic tokens that mirror crypto centralized exchanges or traditional finance broker markets on chain at a one-on-one basis. So this way we unlock all the centralized liquidity, all the centralized liquidity to the decentralized world. So this protocol can be integrated by any Web3 project, wallet, aggregator. So for example, a nice discussion would be to integrate this on 1inch, for example, because literally we would open. So for example, let's say that we will, via RWA tokens, we will be able to access from one single financial broker, one of the biggest that we know in traditional finance, we will able to access 600 billion in real world assets from them because they have these under management. So these assets are available on their platform. We can bring the access to these assets to the decentralized ecosystem. So Morphex is really believing in this technology and will integrate this technology in their platform alongside other features. For example, one that I really liked about that it's pretty unique to what Morphex is doing. It's the Oracle-driven liquidity provision. So they have these liquidity pools, concentrated liquidity pools. So the most efficient pools for providing liquidity in specific ranges of prices. But the thing is, if you want to make liquidity provision easier for this, maybe you need to change the formula. You want this pool to price the assets inside the pool correctly. Okay, so maybe you can take the price from an oracle, but then you need to have a different formula of the pool that will not make the pool composable and compatible for integration within the main aggregators like 1inch, etc. So 1inch, for example, will be easy for them to integrate the current situation of the Morphex pools, because it's literally concentrated liquidity pools. They integrated many of them. But if we change this formula, it would be difficult for them to integrate. So this lack of composability by changing the formula of the pool will create problem for adoption of these assets tokenized on Lumia and offered on Morphex.
Okay.
So
okay.
what? Yes, sorry.
Oh no, I was just saying that that's really cool that you're able to see like your stocks and your crypto all in the same place, because I hate having 5 different apps up for everything that I have, all my assets looking individually. So I feel like Morphex is just going to make it so much more simple to have everything all together. Yeah.
That's exactly what they are doing, and we love it. So I was mentioning that to provide liquidity for these assets, for the assets in the Morphex pools, will be driven by an oracle, but in an external way. So there will be a vault manager, which will be a smart contract where you will simply deploy your funds, and this vault will manage your liquidity position, making this the most efficient system for providing liquidity, especially for RWAs. I know I went a bit technical on this. It is technical. I hope that someone technical is listening or will listen later, because this is pretty unique feature. So, like, in my opinion, it's worth to mention this. Hopefully, Abu, I didn't get anything wrong on this.
It's perfect.
No, and I think just to sum it up for the crowd is like things that Morphex is hitting on or just solving problems for RWAs is I kind of jotted them down while Diego was talking, is fragmented liquidity. I think you mentioned like data and standards, operational gaps. Yeah, and those are just like some of the things that it seems like, and Angel really hit the nail on the head, because she was saying like how Morphex is just bringing a lot of things all in one place, so that it's almost like a super app, right? Like you don't have to go and do this over here and that over there. It just kind of like sums it all up. And I think that kind of like really helps us understand, because we went into RWAs and some of the barriers, and we touched on a bit of them. I won't iterate, but now like with Morphex, it seems like Morphex is solving some of those issues for RWAs. And I think we're kind of getting above on the hour, and I wanted to leave a bit of just a section or just a bit of time just for some of the crowd to ask questions. And I'm going to just go through the chat real quick to see if there are any questions. And if there are, then I'll see if I can get them answered here on stage while we still have some people. And don't forget, like, we've been doing the giveaway each live, and if you're engaged in the chat and then you commented on the X post with a picture of that you're following the Lumia page, then as soon as I pick a name from the chat, I'll go check to see if you've done that. And if you've done that, then you will be the winner of the giveaway. But while here we go. Little Miss Mandy. Okay, here we go. So Little Miss Mandy is asking, what RWA niche will bring the most users? With anybody on stage?
I'll go first. I think there's 2 types of assets. The first is the most sort of sound asset in the world that we know, which is real estate. I think real estate, both commercial and residential, and as well as land itself, will be a real key to increasing TVO and user traction. And then the second, I think, is private credit mechanism that we can offer. Because private credit is very institutional. You have to be accredited investor. You have to do a bunch of things. It's not easy, but it's very lucrative. Once you get into credit, equity, private equity loans, etc., you can make a lot of money. But it's closed off. I think those 2 areas will be key.
Yeah. Yeah, because
Awesome.
there's so much red tape, like with all of those things, and then this is going to make it so much more easy and accessible for pretty much everyone to build wealth. So that's really cool.
Awesome. And I'm gonna just keep going through the chat, but it looks, I'm not gonna lie, it looks like Little Miss Mandy she's in here pretty frequently, and she asked a good question too. If there's any more questions before I wrap this up, because I'm gonna go check to see if Little Miss Mandy is following the page, following the X page, and then if she is, let me go check real quick. If she is, then wait, we have another question real quick. And then while we're answering this question, Angel, after this question, we'll kind of like get ready to wrap things up.
Okay.
All right. So one of the questions was, what's the biggest challenge stopping RWA mass adoption? I think we kind of got into this, but if you want to reiterate, because this question is being asked.
Yeah, so it's definitely a big barrier. It's definitely legal. So make everything work from as we were saying earlier, making it work from the legal perspective to like tokenize in a safe way that will not, because legal, it's not just a barrier for the people that is tokenizing. It's also something that is good for the people that is buying the token, because it means protection for them to a certain degree. Of course, everything can still happen even after legal come in and make everything legit, but still you have kind of some more degree of protection. So this is definitely a solid point for this. Also the ease of use. So like these platforms need to be easy to use. So for example, you can't pretend people to figure out gas fees and these kind of things. People onboarding people from traditional finance or just retails, you can't ask people to figure out that they need to buy a certain token as a gas to do transactions. So this is good. We figured this out and started with Lumia Passport. So this is a little hint.
Awesome. And then it looks like Little Miss Mandy, if you are the winner, and if you could just message the main page on Twitter, I'll get back with you and I'll see you in the DMs. But congratulations, Little Miss Mandy. You're the winner. I'm gonna pin you up here just so everybody knows what I'm talking about. Yep.
Congratulations.
Congrats. And, we're gonna wrap this up, but I'd like to just kind of just really thank the panelists that were on earlier. Unfortunately, they had calls right at the hour mark, so they had to drop off. But thank you, Alexandra from 1inch and John from Hyperlane for coming on. You guys were great guests and dropped some knowledge that I know the audience really learned from. But thank you guys for hopping on.
Yeah, I feel like we got a ton of value in this call. So thank you for all the panelists for coming on. Thank you for all of the people being involved. Thank you, Miss Mandy, for being the one that was the most engaged. Stay curious, guys. We're going to be doing this every other Friday. So follow our X. Make sure that you're following so you know when we're going to go live. But yeah, that's about it.
Awesome. And then one of the cool things you can do before we turn this off is, if you would like to, kind of have a decision, or, we kind of want to know from you, what do you guys want to see from us? If you could comment on the X post of what you want the next topic to be, we'll be checking it out, and it might just be a topic that you choose. So definitely comment, or if there's any questions that weren't answered on the show, hit them in there. Maybe we can answer from the main page. But this is it. We're wrapping it up here, and until next time, see you guys next time.
Bye, guys.
See you guys.
Thank you all. Bye-bye.